So what in the world is going on in this Nashville market? Lately I've been getting a lot of questions along the lines of, is this a buyer's market? And why does it seem like there's a lot more inventory, but properties seem to be moving a lot slower? So the short answer requires us to go back to around 2020 when interest rates were sitting around 2.5% and 3%. During that time, we had a lot of influx of population moving to Nashville that were not opposed to paying $150,000, $200,000, $300,000 above asking price in homes. Money was cheap. You had 2.5% interest rate, and because the market was very hot and there's a lot of people moving here and there wasn't enough inventory to supply the people moving here, the competition was very stiff. So this caused what I call an artificial inflation on market values. You see, at $600,000 to $700,000 values at 2.5% to 3% interest rates, that's pretty affordable, or the payments seem very reasonable. Now you take that interest rate to today where we're looking at 6 to 6.5%, those payments become nearly double what they were, say, just 2 or 3 years ago whenever you were looking at 2 to 3% interest rates. This has created a situation where there are a lot of sellers that if they were to turn around and sell, they can't go out and buy the same property for the same payment that they have on their current property. So we're in a weird situation where market values are still very high. They're not quite at where they were a year ago or 2 years ago. They are not at peak. They're correcting a little bit. Buyers, if they're looking to buy in this market, they can definitely get more concessions out of sellers because they're not competing against as many buyers. There's a lot of people that have pressed the pause button and said, I'm not buying that price point at these interest rates. So while values are still high, it may be a good time for some sellers, especially if you're in a situation where you need to move, like you're relocating for work or something like that. You can still get a good bit of money out of your property. However, you just need to realize that where you move to, you're going to be looking at higher interest rates. You may need to make some adjustments on what you're looking to buy. If you are a buyer looking to buy in this market, you're probably not going to be competing against 30 or 40 other offers on the same property. So you're not in the same situation you were just a couple of years ago, and where it felt like there was no way to win at property, that you have to bid $150,000, $200,000 above list to get it. It felt like an auction process. It felt like you were just bidding just to get something. Today, that's not the case. You have the luxury to be a little bit more choicy and a little bit more picky on what you're choosing from, and to have some expectation that you're going to be able to get some concessions out of the seller if they really want to sell. Just know that whether you are buying or selling, you really need to have good expectations, or you need to have set expectations that are going to be realistic to the market conditions that you're entering into. So make sure you're dealing with a real estate agent that knows the market, knows what's going on, and has the ability to explain what's going on in this market.